Hello and welcome back to Morning Markets from True Potential. We'll kick things off by looking at stock market returns yesterday and overnight. Here in the UK, the FTSE 100 was slightly weaker, down 0.4%, whilst the FTSE 250 was down ever so marginally, down 0.1%. Over in the US equities were stronger. The S&P 500 was up 0.3%. The Nasdaq was up 0.8%. European equities were slightly weaker, down 0.5%, but Japanese equities overnight was up 0.7%. So equities on the whole got off to a mixed start to the week. The FTSE 100 was lower, with travel and healthcare companies particularly weak, while investor sentiment took a hit after data showed China's economy grew at a slower pace than expected in Q3. US equities did buck the trend of European and UK stocks, with the S&P 500 and the Nasdaq both in positive territory and continue to build on last week's positive returns. Growth stocks such as technology notably outperformed value stocks, which is a trend we saw last week. Nothing really behind the moves, with a very quiet day in terms of US headlines. As I mentioned, China's Q3 GDP print did disappoint, coming in at 4.9% over the year, which was slightly less than the 5.1% expected and down from 7% in Q2. It's noticeable because we have become accustomed to positive surprises on the global growth data front. Two key reasons behind the softness: weakness in construction and power shortages, which has constrained manufacturing output. Other Chinese data showed a fall in investment in domestic Chinese real estate, which isn't too surprising given the sharp deterioration in sentiment towards the sector by foreign and domestic investors after companies such as Evergrande missed their bond interest payments. Chinese retail sales were a relative bright spot, increasing 4.4% in September from 2.5% in August and ahead of expectations. On the energy front, we've seen natural gas extend its pullback to a 3-week low, falling just short of 8% yesterday, following forecasts for warmer weather helped to ease worries about winter energy supplies. Furthermore, there are reports of an increase in production of shale natural gas coming in November. Other data that caught my eye yesterday was the October US homebuilder sentiment. That rose to its highest level since July and ahead of expectations. The US housing market, like the UK, has been a real bright spot for the US and really is important given the breadth of businesses who stand to benefit from a healthy housing market. The report released highlighted that current sales conditions have been improving and are expected to continue to push higher over the next 6 months. However, there were some caution that builders are increasingly concerned about affordability with the increase in prices of building materials, bottlenecks and higher interest rates. We'll also have more US housing data out today with building permits and housing starts. Onto the bond market, some noticeable movements here in the UK. The UK 10-year government bond yield pushed up 3 basis points. The 30-year pushed up 1 basis point, but it was the shorter end, the UK 2-year, which moved up 16 basis points up to 0.72%. The reason why? Well, we heard from the Governor of the Bank of England, Andrew Bailey, on Sunday, who hinted strongly at a 2022 interest rate increase with concerns over the rise in inflation expectations. In commodity markets, we saw a little bit of weakness in gold, down 0.1%. Oil Brent crude came in slightly lower as well, now trading at $84 a barrel. And we saw little movement within currency markets. The pound trading against the US dollar at 1.37 and against the euro at 1.18. That's all for today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.